Okay, very good morning, guys. Happy Friday, 8th of September. And before we get the main crux of the briefing underway, and obviously there's been a natural disaster overnight, as I'm sure you've read, an extremely large magnitude earthquake hitting southern Mexico. But before we get onto that and discuss a few points around that matter specifically, and the weather definitely has become quite a focal point of these briefings, as you'll know, over the last 2 weeks with Hurricane Harvey kind of initiating that. But first of all, I just wanted to have a quick recap of the ECB meeting and the movement of the euro, and then maybe some of the other assets as well. But the euro was quite a telling story because we had, well, just going back to the move originally here, and why did we move in the way that we did? Now, I think a lot of understanding what happened yesterday is putting into context what is it that people were looking for. And obviously one of the big things here, well, there's really two things. One is details around policy tightening in regards to the quantitative easing tapering process. How is that going to happen, and when specifically will that begin? And then secondly, what is the ECB's thoughts about the level of inflation? Or not inflation, excuse me, the level of the currency, i.e. I'm just looking at the euro-dollar pair here on a daily continuation chart. And so where we are at the moment obviously puts us all the way back to levels that we haven't really seen since going back to late 2014. And so the question mark being this previous circle that I had here highlighted at the end of June. That was the ECB forum delivered in Central Portugal, where Draghi turned much more kind of bullish over the economic prospects of the euro area. Inflation started to tick up a little bit at that time, and so therefore a more hawkish view, but not only from the ECB, but at that point in time, global central banks were turning that way. So the euro started to appreciate. All this time, it's kind of come in the backdrop of a generally weakening dollar over the last several weeks for a variety of different reasons. But helping this trade then in the euro-dollar pair move higher. The question mark is then, if the ECB want to go down this tightening road, it should then theoretically mean that likelihood is the currency will continue to strengthen. However, the stronger this currency get, that has, as you know from you guys trading intraday, it has negative read across for things like the export names in Germany, for example. But also, if inflation isn't proving to be that powerful, then you don't want the currency to just continue to appreciate rapidly. That's going to kill off any kind of grassroots of inflation returning, certainly where they need it back towards target, because it's been fairly lackluster, if anything. So the question marks then were on really those two things. And as you can see with the ECB event, it's a two-part deal, i.e. have 12.45. Now you can see there is a bit of fluctuation on the wick on either side of on this candlestick. That just being the usual kind of volatility, some outside bets possibly that they could have changed or tweaked something in the initial statement that came along with the interest rate decision. But overall, as expected, unchanged. As per usual, the bigger event was the press conference, and as you can see now in hindsight, really strong rally we had on the upside. Now, why did that occur? Well, really, there was a couple of things. On the premise that we've just discussed on the currency, President Draghi said that the recent volatility in the exchange rate represents a source of uncertainty which requires monitoring. In terms of the currency, that's pretty much all he said. He didn't really say a great deal more. And I think people might have been looking for him to kind of play a bit of a word game in order to control the currency, to move it lower, if anything. This kind of idea of prepping the market for tightening, but cloaked in a very dovish kind of way. One thing is, though, if you think about the currency at this point in time, and why should Draghi feel the need to talk at length to try and talk the currency down, is really where we are in the currency in terms of historically. For you guys who are new and trading now, you're probably used to, if you're watching the markets only the last couple of months, thinking, well, we were talking about parity not long ago at the end of last year. We were down at 105 only a few months ago. And so 120 seems extremely high. And for sure, 120 is a multi-year high. But people like Vass and I, for example, distinctly remember being in the market when we were up at 140, which doesn't really feel that long ago. You know, it was only 2014. We literally got, you can see that peak, just got to 139.93 before then we basically fell all the way down to almost parity in the pair. Now, there's a previous infographic that I've shown you before, and it shows the kind of repetition of words used by the president when he feels that the currency is at a extremely overvalued or undervalued level. And basically, we are in the sweet spot at the moment where it's actually historically proven not to be too much of a concern, i.e. The number of times that it gets mentioned during an average press conference. And I think yesterday kind of fit within that. So overall, there's not a great sense of panic about the appreciation of the euro and a need to talk it lower. That disappointed some investors, and as such, then we continue to move higher as the EC president remains fairly comfortable with these current rates, it would seem, from his communication from yesterday. The other things that were quite surprising is we had the ECB staff forecasts, and for growth estimates, I think they left 2018, 2019 unchanged, but they upgraded 2017 to 2.2 from 1.9%. So they've upgraded growth prospects quite aggressively on the near term. And on the flip side, the other area we were watching closely, and this was because of the ECB sources we had the day before, were indicating a cut to inflation. The cut to inflation forecast was absolutely minimal. And so, again, this kind of dovish things that we were looking for didn't quite materialize. And then to really cap it off, if you remember going back to Friday when we had the release of non-farm payrolls, let me see if I can quickly scroll back. First, let me put it slightly longer dated, but the point being, you'll remember we had a really strong move to the upside originally in euro dollar, only for it then to be taken back extremely quickly. But this was it here. So we spiked higher in euro dollar, and then what happened? 10 minutes after the disappointing non-farm payroll report came out, ECB sources said actually the ECB might not be able to unveil details to tapering of the quantitative easing program until December, which is against market expectations of October. And so hence the delay in tightening, essentially, of policy meant that the euro weakened substantially. And then you can see here, actually post payrolls, the bigger prevailing move certainly was euro weakness. Now, this obviously, this type of source comment, it sets people's parameter of what they're looking for in yesterday's meeting. And then what did Draghi say specifically about October? Well, in essence, he confirmed really that it is October when they're going to unveil these details. He said specifically, quote, "The bulk of decisions will be made in October." And so market expectations have been moved slightly from some of the sources, and then he comes out and sits back on the more hawkish side. And so hence overall the euro appreciated on the actual event itself. It did come back slightly in the US trading hours, but if you look at it this morning, we are up at the top end of the extremity of those moves, right in the immediate aftermath of the meeting itself. So hopefully that just explains a little bit more why the euro was so bullish in those circumstances. It's a real case in point of knowing how the market's positioned, knowing what it's looking for, and then knowing what the context is of recent information that you've had, i.e. ECB sources, because then that's your bar of expectation. And what happened yesterday is that that bar was here and it met what he said in a more hawkish manner, and hence it rallied. Okay, moving over to some of the news that's occurred from overnight. Firstly, just having a quick look at the closes on Wall Street. We were basically flat. The Nasdaq was minor outperformer, up about 0.2. But looking at the charts this morning, slight negative in the DAX future. You can see this very moderate gap lower, and we've kind of found some support here more recently around S1. S&P futures likewise down just marginally. T-notes up about 8 ticks, gold higher, Japanese yen a little firmer. So if you were looking across all asset classes to give you a picture of sentiment, you would say we've got mild risk-off sentiment. Now, a couple things here to get you up to speed on. As I mentioned, an earthquake, various reports about the actual specific size, but Bloomberg here running the headline, 8.1 magnitude earthquake hitting southern Mexico. Now, a couple things here that I wanted to quickly show you in terms of resources that you can use in order to track this kind of information. First off is this. This is the USGS, so the US Geological Survey, and this is your kind of benchmark service or body for monitoring earthquakes globally. You can follow these guys on Twitter. This is quite often where this type of news gets released first, because they have automated alerts that get fired out. But essentially, if you go on the USGS, what you can do here, you can look at the interactive map, and then you can see this is the exact epicenter of the earthquake from yesterday, or I should say overnight. As you can see, you can zoom out. What I find helps always is to put this into a bit of perspective. So obviously on the north side, you've got Mexico City, which is up here, and then going southbound, you've got San Jose, Costa Rica, and so on. Now, one of the reasons why I think it's very good to use these types of resources, and by that I mean the USGS's official government website, is because of erroneous news. If you were trading through yesterday's session, there was a fleeting moment of quite risk-off sentiment, only for about a minute or two, because the British Geological Survey, the BGS, they accidentally tweeted from a technical error a headline that said North Korean earthquake 6.3 magnitude. Now, as a trader, what that says to you is North Korea has just done another nuclear test. That's what that equals, because that's how they pick up on whether these tests are happening, is because of the seismic shock that happens when that test is being carried out. Now, as I say, for about a minute, it did cause a bit of risk-off sentiment. But the first thing I do is I go to the BGS website, I go to the USGS website, I go to official credible sources to verify it, and it was pretty quick. I think it took, I don't know, maybe 20 seconds for me to then come out quite confidently and say, this is not the case. I even think at the time, me saying that, I think after the dip that initially on the news circulating in the DAX, I think VAS even had a very quick little trade on the pullback, because it was pretty clear that this was just a technical error on behalf of that specific Twitter account, where they'd reported old news from the original North Korea nuclear test. So again, verification of these things comes much better when you go to these much more credible services, which are very good at providing real-time information. Now, one of the things here, and again, a couple of things I want to cover, because from a news perspective and to trade these events, it's very important. Obviously, the Mexican peso has been the main trade here, weakening quite substantially on the back of this. But this is an infographic where I'm basically showing you some of the biggest earthquakes that have ever occurred in the history of recent mankind. And so what we can look at here is put it into a bit of context at how big the earthquake is that's occurred last night. And the one that I remember most distinctly was March the 11th, 2011, because I remember getting into the office, turned on the TVs at about 5:45 in the morning, and all I could see was a 10-foot wave heading towards Japan, and I was thinking, wow, this is going to be a very, very busy day. But you can see that earthquake that occurred, which was 9 on the magnitude, which only has happened a very few times in history. That was 9. 8.1 or 8.2 is what's happened last night on the scale has happened before. So it's not by any means the largest earthquake that we've seen. So again, just to put it into some context, it probably, I did check some stats, I don't think it even makes the top 100 in terms of actual size. The obvious thing here as well is that you're talking about southern Mexico. So quickly, back to high school geography lessons. I'm sure you're all aware of your tectonic plate structure. And I bring this up for quite a simple reason, because if you look at this quite nicely, this graphic, right in the middle is where the earthquake happened, literally dead center. This is Mexico here, and that's where it occurred very early hours of this morning. Now, one country in particular, and I only point this out because I was lecturing yesterday, and someone said to me, what could a potential headline be? And they said about an earthquake, a Japanese earthquake, for example. Now, determining how much these type of events are going to move the market can be dependent on the frequency of these types of events happening, i.e., it gets almost priced in to human behavior that these events are going to occur. I spoke to someone from South Korea the other day, and I said, well, how's things going? How do you feel? How does your family feel about what's going on? And he said, quite honestly, it's business as usual. No one's changed anything they're doing. But obviously from a Western world, you're going, wow, you're just about to, you're in close proximity to a country that's testing nuclear weapons. But again, this is because they're used to it. And then the financial markets often operate in a very similar way in terms of the human behavioral element. Now, Japan is interesting because if you look at Japan, this is where Japan is here on the left. And Japan sits as an island in 2 kind of distinct sections. But within, right in the middle, is the country sits between 3 major tectonic plates. And so, does anyone know how many on average earthquakes there are in Japan in a year? Anyone want to give me an estimate in the chat? Okay, I've got first on the board, 24. Anyone else want to give me an estimate? How many earthquakes in Japan are there on average in a year? So this is one of the few countries on the planet which sits right above 3 tectonic plates, all meeting each other. Okay, I can tell all of you, you are way short of the mark. 10, 30, 12, 15. There is 1,500 earthquakes per year on average in Japan. So actually, earthquakes happening a fairly frequent part of life if you live in Japan. And actually market participants, more I'd say institutional, who are generally more educated on these types of matters and have this awareness, that's why the market doesn't respond overall in such a negative way, and moves and reactions can be quite isolated. Okay, sticking with the weather then, the other big thing of course is this. This is Irma forces largest Miami evacuation after wrecking islands. So this is the chart really, which sums it up. We talked about the potential damage, according to Barclays, estimating insured losses of about 130 billion in a worst case scenario. This is what's happening. You've got the Hurricane Irma's here. It's traveling. I've got a couple of points here to cover on this. So it's traveling through here, the Caribbean, Cuba. There's been some reports that on some of the islands there's been 95% of homes completely destroyed. As we go through Saturday, Sunday, Monday, Tuesday, it starts to go through Florida, Georgia, Tennessee, then moving back to east, going through South, North Carolina. So it's hitting exactly over the land mass of the southern or south easternmost tip of USA. Now, the interesting thing here then is that this is going to affect or disrupt power for more than 3 million people. This, as you know, is a very important agricultural area, i.e. the state of Florida. $1.2 billion worth of crops is estimated to get damaged due to this one storm. Now, in the USA, we know that obviously orange juice futures have been rallying aggressively, and Florida is the #1 producer of orange juice. But Florida is also the #1 producer for tomatoes, cucumbers, squash, sugarcane, green beans, you name it. There's a lot of stuff here that's going to be impacted by this. And so, the fallout from this is going to be pretty huge. In terms of an evacuation of the Miami-Dade area, it's the largest evacuation ever attempted in the county, and it's about 650,000 people have been evacuated. Now, what you've got to think about then from a market's point of view is you already saw in the oil inventory numbers yesterday, it started to reflect some of the impact of Hurricane Harvey. This then, I'll be thinking about it more as in, how is this going to affect things like jobless claims, unemployment rates, insurance payouts, all these different things now you need to start thinking about. So if I scroll down to the bottom, it's quite far-reaching, the damage that this can have in terms of an economic perspective. Obviously, OJ's been building up a price premium given the disruption that's anticipated. OJ futures have rallied to their highest level since May. Don't forget about airline stocks. You can expect airline profits over the when they report for this quarter in a few weeks' time, are going to show profits will be down on the back of people not being able to fly. And so that sector is going to be hurt. Miami's financial district, you're talking about Florida Power and Light, the state's biggest utility, saying that the storm may knock power out to customers for weeks in some parts. So there's a lot of different plays here from a trading perspective when you're dealing with this kind of situation. The other one to be aware of is Hurricane Jose, but the important thing to note here is that it's not going to hit land and it's still going to remain out at sea. So it's Irma, which is really the one which is going to have the impact, and something to monitor at the weekend for when we come back in on Monday as to how much devastation there's been on the back of that. Okay, a few other headlines to be aware of. Trump keeps pressure on North Korea as force remains an option. If you remember, we had China earlier this week, and they said essentially that it doesn't do anyone any benefit. There is no option of military action. That was what China said. Now, President Trump has said it is not inevitable that the US will wind up in a war with North Korea. So you would think, okay, that's a fairly good measured comment and something to keep the peace. But then he went on to add that over its continued development of nuclear weapons, but the military action remains an option. I'm not sure if you can have military action and it not lead to war when it comes to dealing with the sensitive area of dealing with North Korea. So, yeah, it's a kind of let's call it a Trumpism of it is what it is. He's kind of been fairly measured in one sense, only then to back it up with a kind of more fire and fury threat. So obviously this needs to be continued to be monitored. I would say though, with a lot of the other things for the market to digest in the last few days, you've got the ECB communication, you've got these weather patterns that have been forming, these kind of natural disasters that have taken some of the focus or market's attention. But North Korea certainly hasn't gone away, and it is definitely something that warrants continue monitoring. We heard earlier in the week as well that North Korea is likely to test fire another missile on the 9th of September. And so that's something over the weekend I'm sure that you'll probably see on your Twitter feeds and on the various news agencies reporting. The likelihood of that happening, I think, is fairly high. When it does, is the market going to react? I think probably not. Not unless that missile lands somewhere or starts to get closer towards, like the previous one, landing towards Japanese actual land mass and territory. Got a question in the chat while we were talking about North Korea. Do I think the idea of North Korea will do a nuclear test tomorrow? What do I think about buying gold before the close tonight? It depends really on your, I would say, what your holding is at the moment, because say someone like Will, for example, I mean, he's been in gold down at 1200, and so now we're up at 1353. Well then sure, yeah, I definitely don't see any reason to come out of any of that gold position at the moment, not with all the things that are ongoing, with the weakness in the dollar, the question marks over the Fed being able to tighten policy, the obviously North Korean situation. I'd want to be in a long position if possible. I guess having it open though and initiating a trade today to keep over the weekend, I probably wouldn't feel as comfortable, to be honest. Not unless we get down to levels here where if gold came down to, let's say, the pivot, which is close proximity to the high print that was seen on the 5th earlier this week, and then we manage to get filled and then it comes all the way back up to R1 and above before the close, then sure, maybe just scale out of some of the position and then keep some of it on the premise that you've locked in and you've got some decent room for maneuver with that trade. But even if North Korea did a nuclear test, now indications are that it will just be a missile test. If they did do another nuclear test, ask yourself this: what difference does it make? They just did a nuclear test last week, and you know, is this an escalation? Even if the nuclear test is slightly larger, the last one was 6 times larger than Hiroshima, and so I think the market's kind of got used to this idea that they are getting bigger. So I don't think you're going to get necessarily the risk reward, I'd say then, of holding that position. You might not get a fantastic amount out of it anyway, even if they did do a nuclear test. So hopefully, Mohit, that helps answer your question a little bit. Okay, a few other things to be aware of. This is, if you don't recognize this chap, this is Dudley, one of the Fed members, and not only a Fed member, this is the vice chair of the Fed. And importantly, William Dudley said the Fed should continue gradually raising US interest rates given low inflation should rebound, which of course is very different from what we heard from another FOMC Board of Governors member, Leo Brainard, who she said the opposite. The uncertainty over inflation means we should think twice about hiking interest rates, basically is what she said. Now the vice chair, William Dudley, is saying we should continue gradually raising US rates, but given low inflation should rebound. This is a clear divide between where he sits and where Brainard sits. Now one thing here is that Dudley is essentially repeating what the current Fed communication is. The outlier here is Kashkari and Brainard. By sounding dovish and being more critical about the possibility of tightening policy because inflation is not where it should be, they are at the moment are against the grain of the overall board, if you like, of voting FOMC members. The question is, what needs to happen then for these guys to start moving into the dovish camp? If that does materialize, then sure, you've probably got more upside in gold, you've probably got more weakness for the dollar to come going forward in the coming months. But what I'd say is, for the time being, I don't see short term any reason really for the Fed to change their communication, not yet. But interesting to see that Dudley kind of just standing pat, reissuing and reiterating the current Fed stance. Quick look, a few UK headlines, and I'll just go over the headlines as a single piece of news. because I often find myself, and I always get criticised by Sam North about talking down the UK economy because he calls me a Bremainer and all these types of things. And I say, whoa, 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 I'm just reporting the news here. And if the economics are slowing, they're slowing. But anyhow, this is just for Sam. So spending in British shops has increased last month at the fastest pace in nearly 2 years. A weaker pound led to more Britons opting to holiday at home and an influx of tourists from abroad. So retail spending having a little bit of a pop on the upside. We look at wages very closely, and this fact that we moved a few months ago in the UK into negative real wage growth, i.e. the price of goods outweighing the increase of people's salaries and so on. A fall in people coming to Britain from other European countries has aggravated a shortage of workers and forced employers to raise starting salaries at the fastest pace in nearly 2 years during August, according to the Recruitment of Employment Confederation. So basically a lack of workers, you could say, coming in from the European Union has meant that then people are getting paid more because of a shortage of workers. So starting salaries are going up. However, one caveat, sorry Sam, British Chambers of Commerce. The fall in sterling following last year's EU referendum has failed to boost UK economic growth. This is a business group which represents thousands of companies employing more than 5 million people across the UK, said no sign on the horizon of a return to healthier levels of growth as it published its latest quarterly forecasts. Keeping in mind then, I guess from a business community, obviously being more, well, A, having more clarity on the Brexit situation, but B, being a part of this European area, at least from a customs union, single market point of view, definitely is more beneficial from a corporate perspective. So it doesn't really, it's not that surprising here. Finally, you did have some data out of China last night. Just a headline reading here: growth in China's exports slowed more than anticipated in August as demand from major trading partners softened while imports enjoyed an unexpected boost. So exports in China just underperforming the last month's reading. Okay, quick look at the calendar. What have we got on the agenda for today? Well, UK data coming up in about half an hour's time. You've got construction, volume, industrial output, manufacturing output for the month of July. You've also got the UK trade balance. So you're going to get quite a bit of information coming out for sterling. However, none of this, unless it's particularly out of line, is particularly market moving on a more regular basis. And then going further forward into the afternoon, actually the CAD is probably a currency to just keep an eye on today, because you've got some decent CAD data coming. That being the employment change and unemployment rate. And that typically, the Canadian currency is quite sensitive to this jobs data because it tends to be quite volatile as a data set. And the reason why I mention it is because, of course, the Bank of Canada surprised the market with an interest rate hike earlier this week. Remember this move here? Really strong move, downside. This is dollar CAD I'm looking at, so CAD strength. We broke below it again yesterday, and we've continued to track lower. So, you know, just looking at that interest rate spike low, we have crept up towards that level before just coming back down again. Again, if the data comes out reflecting a strong job situation, could be an interesting short in dollar CAD later. And then wrapping things up, wholesale inventories from the US, and then the Baker Hughes rig count. You can imagine the likelihood is that rig counts will have stabilized, if anything, may have gone down in the last week, just given the ongoing weather patterns that we've seen, particularly in the Gulf of Mexico. Fed's Harker to wrap things up. Voter speaking on consumer finance, that'll be at 1:45, and then that's it. So that's your morning briefing. In terms of this morning, I'd say you've got a kind of mild risk-off theme, but nothing too exaggerated. That meaning that gold higher, yen's a little stronger, T-notes up, equities marginally lower. There's not a great deal out of the US calendar, so a couple things just to keep an eye on. Any comments on Trump regarding North Korea? I keep half an eye on the weather developments and the fallout from Irma. And then that's pretty much it going forward. So any questions, let me know. Happy to help on the chat room as ever. But have a good day and have a great weekend. Thank you very much.